Welcome back for another deep dive. Today we're going to get into real estate,
Yeah?
but not just the buying your first home kind of stuff.
Yes.
We're going to get into some of the more difficult parts of closing deals.
Okay.
And maybe even uncover some strategies that investors use.
Oh, cool.
So,
Yeah, the real estate is so interesting because there's this whole language you have to learn.
right.
Like,
yeah.
it's not just about finding a cute house.
Yeah, right.
It's about understanding contracts and contingencies and the legal hoops
Yeah.
you have to jump through.
Absolutely. So let's imagine you, dear listener, have found your perfect place.
Okay.
And your offer has been accepted. You're ready to
Yeah.
celebrate. But
Woo!
hold on, before you start picking out paint colors,
Okay.
let's talk about the potential minefield of closing a real estate deal.
Yeah, that period between, like, yes and getting the keys can be pretty stressful.
Oh, for sure.
I think one of the trickiest steps is the home inspection.
Oh.
That's where you might discover your dream home has some not-so-dreamy issues.
Right. So, okay, it's inspection day.
Mm.
What are some red flags that should make a buyer say, whoa, whoa, whoa,
Yeah.
let's take a pause?
Yeah, foundation problems are a big one.
Okay.
Those cracks in the basement wall might seem small,
Mm-hmm.
but they could be a sign of major structural issues.
Oh, wow.
And those repairs get expensive fast.
Oh, yeah.
Another thing to watch out for is water damage.
Okay.
Like a musty smell or stains on the ceiling could mean a leaky roof or plumbing problems.
So it's like a house's medical checkup, but
Yes.
way more nerve-wracking.
Way more.
Because there's a lot of money on the line.
Absolutely. And just like with a medical checkup, you need to know what questions to ask.
Okay.
Like, don't be afraid to get a second opinion from a specialist if something seems off.
Right.
This is where a really good inspector,
Yeah.
someone you trust, is so valuable.
Yeah, it really makes you realize that charming fixer-upper might actually be a money pit. So what other tricky steps should people watch out for?
Well, the appraisal can be a make or break moment.
Okay.
That's where the lender determines if the property is actually worth the price you agreed to pay.
Right.
And if the appraisal comes in low,
Uh-oh.
it can really throw a wrench in the whole deal.
Especially in a competitive market where people are offering way over asking price.
Exactly.
So what happens in that situation? Can you negotiate?
Well, you can definitely try.
Oh, okay.
Sometimes you can renegotiate with the seller,
Right.
maybe
Yeah.
meet somewhere in the middle, but it really depends on the market
Okay.
and the seller's motivation.
So it becomes a poker game.
A little bit.
You have to decide how much you're willing to risk.
Yeah.
And speaking of risks, there's another step that involves a big chunk of change.
Yes.
The earnest money deposit.
Ah, yes, the real estate hostage situation.
Right.
You're handing over a stack of cash and hoping you don't have to kiss it goodbye.
Right.
But seriously, this step is legally binding. It protects the seller if the buyer backs out for, reasons not covered in the contract.
So it's not just a gesture. It's a real commitment.
Exactly. It's designed to make sure everyone is serious about the deal.
Okay.
Now, assuming all goes well with the inspection and appraisal and financing,
Mm-hmm.
you'll eventually reach the closing table.
Yeah.
Before you break out the champagne,
Uh-oh.
you'll face one final hurdle,
What's that?
the mountain of paperwork.
Oh, I've heard horror stories about that. Stacks of documents confusing legalese.
It can be overwhelming.
Yeah.
But one document you absolutely need to pay attention to is the closing disclosure.
Okay.
This is where things get real, financially speaking.
Okay, so what's so important about the closing disclosure?
It outlines all the final numbers.
Yeah.
Your loan amount, interest rate,
Mm-hmm.
those pesky closing costs we all dread,
Yes.
and your projected monthly payments.
So it's basically a financial roadmap for your entire mortgage.
Exactly.
Why should people read this so carefully? Isn't it just repeating what they already know?
You'd be surprised how often errors or last-minute changes sneak in.
Really?
This is your chance to catch any discrepancies before you sign on the dotted line.
So it's like the classic read the fine print,
Yes,
but with way bigger consequences.
absolutely. This is your chance to advocate for yourself and make sure everything is accurate.
Right.
And in your best interest, you don't want to get stuck with unexpected fees
For sure.
or a loan structure that doesn't work for you.
Okay. Okay, let's talk about those dreaded closing costs.
Uh-oh.
They always seem to come as a surprise. Even when
Yeah.
you think you're prepared, our source here actually breaks down all the potential fees, and it's a pretty long list.
Yeah, it can be really overwhelming, like you're being nickeled and dimed to death.
Right.
What helps me is to think about the costs in categories.
Okay.
Some are tied to the loan itself.
Okay.
Others are tied to the property.
Mm.
And then you have fees related to just like the overall transaction.
Okay, that makes sense. So let's start with the loan-related fees. What are some of the big ones that people should be prepared for?
Well, you've got your loan origination fee,
Hmm.
which is basically the lender's charge for processing your mortgage.
Okay.
It's like an administrative fee for all the paperwork and the underwriting they're doing.
Okay, so then there's the appraisal fee that we talked about earlier, which
Yeah.
can make or break a deal.
Right.
Are there any other loan-related fees that tend to catch people off guard?
Sometimes there's a fee for pulling your credit report.
Okay.
It's not usually a huge amount, but it's something to be aware of.
Okay.
And depending on the type of loan you're getting, there might be points involved.
Points, I'm not familiar with that.
So points are basically prepaid interest that you pay up front to lower your interest rate.
Oh, okay.
Over the life of the loan, it can be a good strategy if you plan to stay in the house for a long time,
Okay.
but it does add to your upfront costs.
Right, so it's like short-term pain for long-term gain.
Exactly.
Okay, let's move on to property-related fees. What falls under that category?
This is where you'll see things like the title search and title insurance,
Okay.
which protect you from any nasty surprises about the property's ownership history.
Right.
Then you might have a survey fee to determine the exact boundaries of the property.
Great. You don't want to find out that your neighbor's shed is actually on your land.
Exactly.
What about the home inspection fee? I remember having paid that up front before my offer was even accepted.
Yeah, that's pretty standard practice.
Okay.
It shows the seller that you're serious, and it helps expedite the process.
Okay, so we've got loan fees, property fees. What's left?
Yes, the transaction-related fees.
Okay.
These are the costs associated with actually getting the deal done.
Okay.
This might include attorney fees,
Okay.
recording fees to make everything official with like public records.
Okay.
And then there's those escrow fees for the neutral third party who handles all the money and paperwork.
It's amazing how many people are involved in this whole process.
It really takes a village to buy a house.
Right.
And that's why it's so important to get a detailed estimate of these closing costs up front,
Okay.
ideally before you even make an offer.
Why is it so crucial? I mean, if you're already committed to buying the house, won't you just have to pay whatever those costs are?
Yeah, you would, but getting hit with a huge unexpected bill at closing can be a real shock.
Right.
And it could even like derail the deal if you haven't budgeted accordingly.
Right. It's like planning a vacation and only factoring in the plane ticket and then realizing you forgot about hotels and food.
Exactly. Closing costs are part of the total cost of homeownership,
Okay.
and you need to be prepared for them.
Okay.
Now, speaking of hidden costs and surprises, let's dive into another critical document, the real estate purchase statement.
Oh, this sounds intense. I'm picturing a massive spreadsheet with like a million rows and columns.
It can be a bit daunting,
Yeah.
especially for first-time buyers. Our source actually breaks down 50 key items that often appear on this statement.
50. That's a lot to digest.
Yeah,
Let's try to break this down into more manageable chunks.
absolutely. We can start with the big picture items.
Okay.
The purchase price, the financing terms you've negotiated, and your down payment amount. These are the fundamental elements of the deal that everyone understands.
Right. That's the easy part. What about the less obvious items, the things that might trip people up?
Well, there's a whole section dedicated to protecting the buyer and ensuring everything is above board.
Mm.
This is where you'll find things like contingencies.
Contingencies. Those sound important. What are they exactly?
A contingency is basically a condition that must be met for the deal to go through.
Okay.
For example, you might have a financing contingency that says you can back out of the deal if you're unable to secure a mortgage.
Okay.
Or you might have an inspection contingency that allows you to renegotiate or walk away if the inspection reveals major problems.
So it's like a safety net.
Exactly.
Hmm.
It's all about protecting your interests
Okay.
and making sure you're not getting into a situation you're not comfortable with.
What other protection items are typically included?
Well, you'll also see disclosures from the seller revealing any known issues with the property.
Okay.
And of course, there's language about the inspections we discussed earlier,
Yeah.
ensuring that they're completed to your satisfaction. And let's not forget about the title search and insurance that all gets documented here as well.
So this document really is a roadmap
It is.
for the entire transaction.
And it's crucial to review it carefully.
Okay.
And make sure you understand everything before you sign. Don't be afraid to ask questions or seek clarification if anything is unclear.
So we got the big picture, we've got the protection elements. What else is lurking in this 50-item behemoth?
There's also a section that focuses on the less glamorous but equally important behind-the-scenes players.
Okay.
The escrow agent, the closing agent, and the notary public.
These are the people that make the magic happen.
Exactly. They might not be the stars of the show,
Right.
but they play crucial roles in ensuring the transaction goes smoothly and everything is legally sound.
So even though you might not be interacting with them directly, it's still helpful to understand their roles and responsibilities.
Yeah, it gives you a better sense of how the whole process works, and it might help you avoid potential pitfalls or delays.
Okay.
Now, we've talked a lot about buying real estate as a place to live,
Right.
but what about those who see it as a way to build wealth?
Right.
How does the game change when you're looking at real estate as an investment?
That's a great question. I'm ready to put on my investor hat and think about this. Okay, so we've talked about buying a house to live in.
Okay.
Let's switch gears a little bit and talk about real estate as an investment.
All right, yeah, it's a whole different ballgame.
Okay.
When you're looking at property as an investment,
Okay.
you're not just thinking about, curb appeal and school districts.
Right?
You're analyzing cash flow, you're analyzing appreciation potential, and of course, exit strategies.
Yeah, our source here actually breaks down several different exit strategies. So, let's start with the most obvious one, just selling the property to a third party.
Right.
That seems like the classic way to cash out.
Yeah, it is the classic way, but even with the traditional sale, there's a lot more to it
Okay.
than just, sticking a for sale sign in the yard.
Right.
Like market timing is huge.
Okay.
Is it a buyer's market? Is it a seller's market? You also need to factor in the property's condition, the location, any unique features that might appeal to buyers.
So it's not just about buying low and selling high, it's about understanding those market dynamics.
Exactly.
Okay, so what about for investors who are looking for more creative ways to cash out?
Oh, yeah. There are some really interesting options out there.
Okay.
Refinancing, for instance, can be a way to tap into the property's equity without actually selling it.
Okay, so I've heard of refinancing to get a lower interest rate,
Uh-huh.
but how does that help an investor make money?
Well, let's say you buy a property for $300,000.
Okay.
And over time, it appreciates in value to $400,000.
Mm-hmm.
Okay. You still have a mortgage on the property,
Mm-hmm.
but now you have $100,000 in equity.
Okay.
Refinancing allows you to take out a new loan
Right.
based on that higher property value, giving you access to that $100,000.
So you're basically pulling money out of thin air.
In a way,
So what do investors usually do with that cash?
well, they might use it to renovate another property,
Okay.
buy more real estate, or even invest in something completely different.
Oh, wow.
Like the stock market, it's a way to leverage the equity they've built to grow their wealth.
Okay. That's pretty savvy. What are some other less obvious exit strategies?
Well, our source mentions something called a 1031 exchange.
I've heard that term. I don't really know what it is.
It has to do with taxes.
Okay.
It's a way to defer paying capital gains taxes when you sell an investment property.
Okay.
The catch is you have to reinvest the proceeds into another like-kind property
Okay.
within a specific time frame.
So you're basically rolling your profits into a new investment and avoiding those taxes.
Exactly. And that can be a huge advantage for investors who are actively building their real estate portfolio.
Right.
It allows them to keep that money working for them.
Okay, so refinancing 1031 exchanges, what other unique scenarios did our source highlight?
There's the sale leaseback, which is interesting.
Okay.
You're selling a property, but then leasing it back from the new owner.
Why would someone do that?
It can be a way for businesses to free up capital while still maintaining use of the property.
Okay.
So let's say a company owns its office building,
Mm-hmm.
but they need cash for expansion. They could sell the building to an investor and then lease it back,
Okay.
giving them lump sum of cash and allowing them to stay in their current location.
So they're trading ownership for that liquidity?
Exactly. It's a win-win for both parties.
Okay.
The investor gets a reliable tenant,
Right.
a steady income stream,
Okay.
and the business gets the cash they need to grow.
Okay. And our source also mentioned legacy planning as an exit strategy.
Oh, yeah, legacy planning. That's all about the long term.
Right.
Deciding how you want to pass on your real estate assets to future generations.
Okay.
This could involve setting up trusts, gifting property to heirs, or even creating a plan to manage and distribute those assets over time.
So it's not just about making money while you're alive, it's about creating a legacy.
Exactly. It's an important consideration for those who have built significant wealth through real estate.
Okay.
It's about making sure those assets are protected and passed on in a way that, aligns with their values.
Right. So we've covered a lot of exit strategies from the traditional sale to some really creative options.
Yeah.
But before we wrap up this real estate deep dive,
Oh,
I have one more thing I want to bring up.
okay. I'm intrigued.
When I was digging through our sources, I stumbled across something that kind of surprised me.
Oh, really?
It turns out that the Uniform Commercial Code
Okay.
or UCC, can actually play a role in real estate transactions.
I thought the UCC was all about business transactions, like selling goods, not real estate.
Me too. But there's this specific scenario where it becomes relevant, and that's fixtures.
Fixtures like that amazing chandelier I saw in the lighting store.
Well, that could be a fixture, but in this context, we're talking about items that were once personal property, but they've become permanently attached to the real estate.
Okay.
Think built-in appliances, wall-to-wall carpeting, even those elaborate landscaping features.
Okay, so those items basically become part of the property,
Right.
and that's where the UCC comes in.
Exactly. The UCC governs security interests.
Right.
Which basically means it dictates who has the right to those fixtures if, let's say, a borrower defaults on a loan.
So if I understand correctly, the UCC isn't taking over real estate law entirely,
No?
but it's kind of a reminder that even these simple transactions can have legal wrinkles.
Exactly. It's always a good idea to have legal counsel involved, especially if there are unusual circumstances or potential disputes.
Yeah, better safe than sorry when you're dealing with such a significant investment.
I think we've covered an incredible amount of ground in this deep dive. We navigated the treacherous waters of closing a deal.
Yes, we did.
We decoded those mysterious closing costs.
Those pesky closing costs.
We tackled the purchase statement, and we even explored real estate investing.
All the exit strategies.
All those exit strategies and the UCC curveball at the end.
It's been a journey.
I hope our listeners are walking away feeling more informed and empowered to make smart decisions in the real estate market.
Me too.
Whether you're buying your first home or building a real estate empire, knowledge is power.
Absolutely.
Thanks for joining us on this real estate adventure.
Thanks, everyone.
Until next time, keep exploring, keep learning, and keep diving deep.